Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Thick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Friday the 13th edition of Benzinga's Pre-Market Prep. I hope no one is superstitious, Joel. I hope you're not superstitious because we got a good show ahead of us today, but we're watching the market as always. Some headlines. Well, earnings are in the news this morning, so we got Wells Fargo out. We have Bank of America out, JP Hunt out, PNC. Going to recap the action in HMNY yesterday. Steel stocks are getting a boost this morning. We got some economic data coming out as well, and some Fed speak later on today. Two guests for you today. First up, Bill Studebaker at 8:15. He's the CIO of ROBO Global. Bill's all about investing in AI and robotics, so he's going to talk to us about how to get exposure to those trends. And then at 8:35, we're joined by Gary Kaltbaum of Kaltbaum Capital Management and GaryK.com. Joel, what's doing this morning?
We're up 3 points in the S&P's, one number and one number only, 2553.50. That is your all-time high. That was made on Wednesday. We bump our head up there a couple times. Maybe today's the day we finally break through. Crude trading up $1.04 at 51.64, just a nickel off the high. Crude found support. Now we're rallying. Let's see what the high of the move was in the crude oil market. It was leaving the $52 handle. Let's see. Oh, even got just shy of 53. So we'll keep an eye on the crude oil market. Gold and silver in the red. Gold cannot get through that $1,300 level, down $1.80 at $1294.70. Silver only down 3 pennies at $1723.50. Dennis, happy spook. What it Friday the 13th to you?
I'm feeling spooked here, especially. I bet you Wells Fargo shareholders are feeling a little bit spooked here too, because that stock just got killed. 8 o'clock. We just came out with the numbers right as we were starting the show here. Spencer, give us the details. WFC numbers are not good.
We got Q3 GAAP EPS of 84 cents. The estimate, which it may not compare to, is $1.03. Sales of $21.93 billion versus $22.41 billion. So a big miss on the sales, a big miss on the EPS if it's comparable.
It does look like there's a 20 cents. I'm looking at 20 cent issue due to litigation. So it does look like you got to add on another 20 cents, which would then be a beat. So there is that one-time special item. But I mean, Citigroup, they're beating by a penny only even after, you add that 20 cents back in. And Citigroup and JP Morgan, blew the numbers away yesterday and they got hit. So it's not surprising that Wells Fargo is getting hit on, really it is disappointing numbers, especially when you put it in the context of what Citigroup and JP Morgan did yesterday. So WFC just traded down to 53. We are on the comeback trail. Stock is actually already back up. It's rallied about 75 cents from those lows. It is really whipping around here right now in the pre-market. Joel, give us quick thoughts here as Wells Fargo trades very volatile here this morning.
Well, first of all, I didn't look at this thing ahead of the report, but look at the Great Wall of China that had just under 56, several days of consolidation. Now we broke it through the support at 55. Your pre-market low is 53 even, getting a little bounce at 53.70. Basis the daily charts. I see a low. Do we have anything at 53? 53.28 was a low that you had back on September 20th. The other thing I have to say is this is just such a huge move for Wells Fargo. Takes so much volume to move this stock during a regular session. I don't know. Your low could be in this one. That little bit.
I think the 53 was a washout low. I kind of agree with you. Although yesterday, obviously, Citi they pulled they pulled the rug right out from underneath that thing. It actually traded up during the pre-market session, and then and actually was trading up during the regular session as well. And then they just tanked at 4 points just for fun. So these things can be very volatile off of earnings. But I think the 53. What did we get? 53 even?
Yeah, 53 right on the nose.
I think that's the washout low because it just went 55, 54, 53. It was all an initial reaction, and now it's already bounced up and it's in the 54 handle there. So that's a number I'm keeping my eye on too. If that number comes into play in the regular session, that is where it just bounced in the pre-market. Very early here, though. We're still digesting the report, and we'll find out, obviously, in the regular session when the real liquidity comes in, if they are going to continue to hit the stock. Also reporting, which had okay numbers, was Bank America. They reported around 7 o'clock this morning. Spencer, details on BAC.
Yep, give me 1 second to pull that up here. Bank America reported this morning Q3 EPS of 48 cents. That's a 2-cent beat. Sales of 21.8 billion versus 22.07 billion. So a beat on the EPS and a slight miss on the sales.
And the stock is trading up. It was trading higher, Joel. Give us a pre-market action there as we've been kind of bouncing around on BAC as well.
25.31. That's your pre-market low. Bounced up to 25.80. Once again, another big, thick stock here. I think what I'm going to be keeping an eye on here is your old support, which is going to be new resistance. You had several lows on the daily chart right at the 25.70 area. Yesterday got to 25.93, but just tells me that all those lows at 25.70 is going to act as resistance. Coming back on the downside, you've had some tight ranges in Bank America over the last few sessions. Call 25 even if it really goes into reverse. I see 25.39. I see three lows right at the 25.30 area. So things tight, 25.30, 25.70. Those are your levels in Bank America.
Let's jump over to the other financial that reported earlier this morning was PNC. We haven't had hardly any action in this one this morning. Actually, we've had zero. Stock is not traded here this morning. It's bid at 135.28, which is up from the close. Best offer is way up at 137. Spencer, give us the details. PNC.
PNC Q3 EPS $2.16 versus $2.13, so a 3-cent beat on that. Q3 sales of 4.1 versus $4.11 billion, so just about even or flat on that. Third quarter net income of $1.1 billion for PNC.
Joel, thoughts, concerns, PNC? We haven't had any trades, so it makes it difficult to get in there. Make price discovery happen. Right now, make price discovery great again.
You know who used to love to trade this, and they called it punk?
I remember the punk. Who was that? Conrad?
Yeah, good call. Yep.
That was a Conrad, just because he said punk. I'm like, that's a Conrad saying right there.
Yep.
Been a long time. I haven't seen Conrad. You saw Conrad a couple of years ago, didn't you?
About a year ago. Maybe we'll see if we can get him on the show.
Oh, that'd be great. Conrad, he's one of those old guys in our Bright office back in 1999. I remember going outside because I'm Canadian, I cross the border and, trade over. And I remember coming out and looking at my car, and he had a sticker on there, and it was sled dogs, and it said mush. And you're always making fun of us because we were Canadians. So going in your sled dogs. Conrad was fun.
37.41. That's your all-time high. That was made in yesterday's session, so I'll keep on that. Since it's not trading, why not just keep an eye on the range from yesterday? Good support at the 135 area. You had a couple lows at 34.94 and 35.11, so 35 even on the downside. All-time closing high was actually made on Tuesday, 136.72. So those are your levels in PNC.
Jump over to the last one that just reported was JB Hunt trucking stock. Hasn't really traded much either, but his offer down, it does look like a miss. Spencer, details JB Hunt. 91
cents versus $1 estimate sales of 1.84 versus 1.82 billion. So a slight beat on the sales, but a 9-cent miss on the EPS.
Yeah, not good news here for JB Hunt. Stock ran up into the report yesterday. Somebody got the memo wrong, it appears, because stock missed and is trading down. Again, we've only traded 100 shares. We just kind of trade at 106 on odd lot, then 107.48. Is offered at 107.75 for 1,000 shares. Best bid's down at 105.11. So it does look like somebody's sticking their neck out saying, hey, I think the 105 is going to hold, and that's maybe why the little bid is there. But it's very early to tell if that's going to hold.
They're looking at Wednesday's low at 105.11. That was buffeted by Monday's low at 105.09. So let's call it 105. Your support on the downside. On the upside here, always like to see if you can retake the closing price, but I don't know if we're going to get that because that was up at 108.35 with a 108.42 high. So a little bit lofty, being offered down. If it goes into reverse, key level 105 in JB Hunt.
All right, jump over to the movers here today. I'm going to jump over to the stock that's been moving. It got Citron there, and let's talk about it again, HMNY. It is now down at $18.95. So we're on the show 2 days ago. The stock was $33. And I said it could have the potential to get Citron. It did. The bubble buster came in that morning and talked about it. Stock tanked down to under 30. Then they had some other news come out. Stock tanked down to under 20. It tried rallying a bit yesterday. It opened actually up around 31 and then right back down. Now under $20, trading at $18.95. Thing has been cut in half in 2 days. And that's the trouble when you're chasing these stocks that go parabolic. When the top comes, it comes fast. And if you're not quick to get out, you'd be losing 50% in 2 days.
Did you ever check the borrow on that?
I never did. Here, I'll check it right now.
Yeah.
Let's go check it. Well, I'll check. I've got a couple different sources here. So I'm checking first. I bet you the locate's tough.
Yeah, well, because...
Waiting. See if I can even get a locate over here at this one. I just went over to my one locate spot. Waiting. So they're searching hard for me over there. I still haven't got a locate on HMNY. Waiting. Okay. Anyways, it looks like it's a slow locate. So nope, it's rejected. No locate there.
Yeah.
I'd have to go try another spot too, but it looks like the locate's probably tough. And even Citron in his tweet, I think he said, and I think he said that the borrow was tough.
Yeah. The only reason I asked is because there's certain stocks that we follow here on the desk, and I do some updates for Chubbs, periodically. And I tell you, this is one stock that I'm just, you see the rallies. It has this huge movements for absolutely no reason. Here we are, HMNY. You can't find out any fundamental information on it. And here it is, back down. Also, it did that previously. Dennis, I think you mentioned this on the show the other day that going on the weekly, you had a pop up to 16 and came right back in. So don't know if this is going to come right back into the levels it was before because of it has movie pass or something. But looking at $16, I see there was a high there and then a low. So maybe if you're looking to bring up a short,
even trade this technically. I mean, it's just headlines driving it. It's all just momentum. Momentum breaks, comes down. I mean, this thing's just wild. It's going to probably have a 3-4 point range here again today. So, but the bubble's burst. So path of least resistance is hard to say. This thing has already fallen 50% in 2 days. Could it have a 5 point bounce? Yeah. I just think, when the dust settles, just like I said when it was 33, I think when the dust settles, I think this is a single digit stock. And I think that's, in the future. Now it's a ways out. I don't know. It's hard to predict these things, but I just know these things go parabolic. And then they seem to, 2-3 months later, give it all back. So that's from my experience why I don't trade these things.
This falls in the same category as OPTT, oceanpowertechnology.com. They have something out in the middle of the ocean. I don't know what the heck it does, but they get a contract for like $1 million. And then they juice this thing, and then it comes. I can't remember when it went to 50. They must have got a $2 million contract on that one. But the news quickly settles. I mean, these stocks, it might be fun for a day or two, but if you're trying to, day trade them on the long.
I mean, that's all you can do really is day trade them. I mean, if you're trying to invest in them, I think it's a bad idea on a lot of these things. It depends when you get them too. I mean, if you're early in the thing and they're in $2, $3, $4, $5. Well, it's a different story. But if you're trying to come in and invest in something that's went from 5 to 35 and saying, it's 3 weeks later, and you're buying this thing up at 35, you're chasing. And I mean, I have always lost money. Maybe my trading I've done okay with chasing, but in my investing, I have always lost money when I've chased. So that's why I don't chase stocks, and I'm more of a valuation guy, so it's different. I use a different, strategies, obviously, in my investing, and valuation has been difficult. It's been difficult to use, just valuation in the last few years because certain stocks valuation doesn't matter. So it's a tricky investing in market. I know everybody says, it's easy because it's going straight up, but it's been the same stocks going straight up too. And there's obviously, if you're a value player, it's been a little bit tricky.
All right, that 8:15, Spencer. Do we have a guest?
We do have a guest, a new guest, Bill Studebaker. He's the CIO of ROBO Global, and he basically his entire thing is investing in robotics and AI. That's what he does. So if you have questions about artificial intelligence or robotics and how to get exposure and how to trade it, well, we're about to find out with Bill, so we'll be right back. Welcome back, everyone, to Benzinga's Pre-Market Prep. I'm Spencer Israel here with Joel Elconin and Dennis Dick. And we're on the line with Bill Studebaker, CIO of ROBO Global. Bill, how's it going today?
Doing great, thanks. Thanks for having me.
All right, so first tell us a little bit about ROBO Global and what you guys do, and then we'll get into the meat and potatoes of this thing.
Sure. So ROBO Global is an index company. It was actually roughly about 4 to 5 years ago that we had the belief and anticipation that robotics and AI were transformational technologies that could change the world in ways that were hard to imagine and difficult to predict. At the time, we wanted to invest in the sector, but we didn't know how. There weren't any dedicated mutual funds or hedge funds or very few in venture capital that were kind of focused on this opportunity. So we decided to create our own index. And we actually created the first and only index that tracks robotics and automation companies globally. And we did this by producing the first ever classification system for the industry. So similar, if you were to invest in the oil sector because you thought energy prices were going up, there are ways to participate, right? You can invest in upstream companies, downstream companies, services, et cetera. Well, the same sort of situation exists in robotics and AI. And we very simply define a company as either a technology or an application. So within technologies, it's what makes the robot work. That's the computing, the processing, the sensing, the actuation, the integration capabilities. And then the applications are effectively the use cases. So where is robotics being deployed? It's being deployed into everything from food and agriculture to warehouse automation, to industrial manufacturing, to healthcare, to security and surveillance, to name a few. So that's how we did what we did.
Okay, so tell us a little bit more about that then. So let's break down. We get questions in our chat all the time about how do we get exposure, how do we trade, how do we invest in AI and robotics. So let's break down the entire landscape as far as investing is concerned. I know it's a big question.
Yeah. So again, what we try to recognize here that the world is going through major disruption, and to pick the obvious winners or losers is going to be a difficult job. In hindsight, everyone is an expert on Amazon after the move it's had, after even companies like NVIDIA, which is now kind of a household AI name. I'd say as far back as a couple of years ago, that wasn't the case. So we've taken a tack that the index approach is the best approach. And we try to do for investors is to give them exposure across the entire value chain of technologies and applications, also recognizing that this is very much a global phenomenon that's occurring. This is not just isolated to the U.S. In our index of companies, which is actually 83 companies, or actually 84, it trades in 14 different geographies. It's 40% U.S., it's 60% international, and it's 25% large cap, 75 mid and small. None of this is by design. It just happens to be where the technologies exist. And so we've taken this approach to investing. We think that when you think about robotics, automation, AI, a couple of years back, I think a lot of people would have kind of viewed this as being very much a kind of a niche technology sort of play. But I think what investors are beginning to appreciate now, as Bill Gates said it back in 2013, he expected robotics to be more ubiquitous than computers and more transformational than the internet. And so what you're seeing right now is that these are foundational technologies that are being applied to all industries, all markets, and it's happening now. And it's kind of interesting to see if you look at the performance of Robo, the index is up nearly 40% year to date, which compares to the FANG stocks. If you look at the FANG index, the FDN index is up around 32%. And so we think that this is really kind of the next trade, if you will. And then these are the new FANG stocks. The FANG stocks, interestingly, are using these technologies to enable their business. We're providing the technologies, if you will, going to the gold rush, the picks and shovels. And that's sort of the opportunity here for investors. And does that answer your question?
Yeah, it does for the most part. Dennis, I think you wanted to jump in.
Yeah, I had a few questions here. Bill,
sure.
On an ETF, I was just looking at
Dennis,
shares on this. Oh,
Dennis,
I think
cutting in
I'm
and
there.
out. Okay, we got you.
Yeah.
Okay, Spencer's headset's messing up. I wasn't messing up. Anyways, Bill, ROBO, nice volume yesterday, 585,000 shares. How do you, because you see a lot of ETFs launch, and a lot of times you don't see much volume in there, but this one's, picked up some pretty nice volume here. How do you successfully launch an ETF and get the volume behind it too?
Well, it's difficult. I mean, certainly you need to get to a reasonable AUM and revenue threshold to sustain the business. And most ETFs, if they can't get to $100 million reasonably quickly, find out it's pretty difficult to stay in business. The key to anything really in finance is not only having a great investable idea, but then having distribution. What we were very fortunate about here, Spencer, is that we not only identified what we thought was one of the best investment opportunities out there, but we brought in some of the world's leading robotics thought leaders and entrepreneurs. If you go on our website, roboglobal.com, you can look at the team we've assembled. It's really kind of the Michael Jordans, if you will, of the industry. Just to highlight a few people, one gentleman's name is Raf Neandria. He co-founded Kiva Systems, which is now Amazon Robotics. That's 100,000 robots. They're doing the fulfillment within Amazon warehouses that will be going to over 1 million robots eventually. He sold that to Amazon in 2012 for $800 million. We have Henrik Christensen is one of the preeminent authorities in robotics and automation. He's authored hundreds of periodicals on the topic, advises a multitude of Fortune 500 and global companies on robotics and AI implementations. Another gentleman, Ken Goldberg, is a distinguished professor at UC or Berkeley, who's done a lot of work in actuation and gripping systems. But you can read about our other advisors. But bringing these people on brought us a lot of credibility, and we were fortunate enough to have gotten on several of the major wirehouse platforms. And that's really kind of what's helped enable our growth. But certainly we want to be recognized, which I think we're in the process of doing, is being recognized as the robotics and AI thought leaders. We produce a lot of content. So not only are we providing the index, but we're also doing a lot of research that supports it.
We're on the line with Bill Studebaker, CIO of ROBO Global. A couple questions out of the chat, but first, let's break down some of the individual names in the ETF, maybe the top 3 or 4 components, and also the process that you go through in choosing stocks to put into your index.
Sure. Well, why don't I start out with how the portfolio is structured. So different than how a lot of ETFs are set up. Our style was not to go after and make this be, market cap weighted and concentrated, which a lot of ETFs are. That's the way they're constructed. We design our index to basically give investors as much upside participation, which with minimal amount of downside volatility. We set a structure up where we have what we call 40% of the portfolio is bellwether. That each bellwether position has a 2% weighting, and a non-bellwether has 1% weighting. That's 60% of the portfolio. And so when we go and select a security that goes in the company, or select a security that goes into the investable universe for consideration, we actually have a database of 1,000 companies globally that we track, both public and private companies. There's roughly around 300 public companies that are on our radar screen. To go into the index, a company must fit within one of our 12 defined subsectors, and then must have a minimum level of revenue that corresponds directly to robotics, automation, AI. A bellwether company on average has between 60 and 70% of revenue that comes directly from those activities. A non-bellwether has on average around 25%. We're looking for companies that clearly are leaders in their industry and that we think have defined moats around their businesses. We then take that investable universe, which then gets sent to our calculation agent that runs it through exchange traded eligibility, minimum market cap, volume, and then we have a ESG, socially responsible filter that's applied to it. In addition to that, our position sizes are capped out at 5% of the free float. And that produces a index now of 84 names.
Hey, what are just give us the top three.
Well, that's the top, five-ish. Well,
go ahead.
A few of the big names. A few of the bigger names would be, let's see, we've got Cognex, CGNX. We've got Raven Industries. We have Zebra Technologies, Daifuku, IPGP, iRobot, Intuitive Surgical, just to name a few.
Okay, man, all those charts look real nice. All right, our listeners want to know about the chip makers. Now, there are probably multiple chip makers for robotics and this kind of technology, but who are some of the leaders in the space?
In terms of chip makers, well, of course, we've got companies in there like NVIDIA. We've got other names in there, Qualcomm. We have names that some people may have not thought about that are interesting plays on autonomous vehicles and vision technologies like Ambarella, that most people would recognize as being sort of tethered to GoPro. However, they bought a computer vision or autonomous driving technology a few years ago, and they're in the process of unveiling their first computer vision chip for drones and for the auto industry.
I would be remiss if I didn't ask you about Veritone, VERI. The stock just had an incredible run, came crashing about the earth. Can you provide us with any fundamental information on Veritone?
That one, I can't. It's a name that's in our database. It's obviously just come public. We have a little bit of a seasoning period of time before we can put it in our portfolio. One of my partners has spent time looking at it, so I can't personally make too many comments right now, unfortunately.
That's a great point that you're making there. I love that you have that seasoning time there because so many of these little companies come out. And do you consider what goes in? Like, do you look at stuff like valuation? I mean, it's tricky because these companies are growing so fast. But do you try to grab growth at a decent valuation on the stocks you're putting in there, or is it just?
Yeah, that's a good question. It's actually a great question. We do not have a hard filter on valuation. Having said that, we certainly are very selective and aware of valuations. In my mind, anything that trades at upper single digit revenue multiple, I want to be very, very cautious on putting it into the portfolio. What we're trying to avoid is putting any science fair experiments into our portfolio. We really want to put companies in that have proven revenue. We're not, for example, putting in a medical technology company that we think might get FDA approval. So the beauty behind what we've done is actually our portfolio, given that it's quote unquote technology, has pretty low volatility. Our standard deviation volatility everything is low this year. It's around 9%. The historical volatility is in line with the S&P of around 11%. When most people think about volatility, they think about upper teens or low 20s. And so part of the reason is that we're trying to do the best we can to eliminate the unnecessary idiosyncratic risk. And certainly that would be by putting companies in that either have prototypes and or not very well defined business models. So if you look at trades around 26.5 times current year earnings and around 21, 22 times forward earnings, with an estimated earnings growth over the next 3 years of 1%. Those are not our numbers; they're actually sell side numbers, and the sell side typically tends to be behind the curve when it comes to growth. And so that's why we think this is pretty well positioned. But I bring this up around the valuation just to give you some awareness that we do have some sensibility around valuation.
What was that stock that you just mentioned? You cut out for a second there.
Was that Ambarella? AMBA is the ticker.
Okay. Bill, got one more question for you, a little bit off the subject, even though you really know your subject well. You were a trader on the New York Stock Exchange floor before doing your current venture. Do you have a good story from us, that's maybe helped shape your trading career, your investment philosophy back from your floor days?
Well, I think one of the biggest things I've learned over my 25 years in financial services is to pick the big winners is really hard. Everyone, wants to find the next big winner, right? So whether it was Google or Facebook, or think about even companies like Netflix. And interestingly, in my prior job, I was a portfolio manager for a company called Apex Capital, a hedge fund in the Bay Area. And we took a position back in Netflix in 2012. We actually, unfortunately, did own it in 2011 when they changed their pricing scheme and the stock went from 300 to basically $65 in a pretty rapid period of time. We never lost sight of the opportunity that Netflix had, which was to be a global subscriber base company with tremendous disruption to the cable box, and in terms of bringing a lot of value to the home. Interestingly, we bought the stock at $65 when it had a market cap of a little under $2 billion. And as we were sort of looking at the numbers, we were looking out 5 years and coming up with earnings estimates that were exceeding the stock price that at $65. No one wanted to believe that. And so interestingly, we made it a 6% position at cost. And over the next 3 years, it was a 10-bagger. We then sold the stock, and the stock since then has gone up probably another 3 or 4-fold. I bring this up is that everyone always wants to pick these big winners, but to pick the obvious entry point and the exit point is really difficult. Everyone probably heard about Kyle Icahn buying NVIDIA. I think he bought the stock probably 50% after we did, and he sold it about 3.5 years ago. He was happy because he made $1.5 billion on, which anyone would be happy with. But the important thing is here, I just bring this up that everyone wants to pick the big winners. And after they did possibly identify one, they probably didn't have the position size scaled up enough to take advantage of it. We think right now, as you're thinking about robotics, automation, AI, in my mind, there is no more obvious investable megatrend than this that I've ever seen. And we're pretty happy to put together a product that appeals to the common investor. It's unfortunate that most often the retail investor, even the high wealth, net worth investor, gets access to these kind of opportunities after every hedge fund or venture fund or vulture fund is picked over it. So by the time you're in the 6th or 7th inning is when the average investor gets access to an idea like this. We just so happen to have put together an idea that is investable for everyone. And we've tried to smooth out the volatility, and we rebalance quarterly to help take advantage of the opportunities, and the risk for investors. And so I hope that was an interesting perspective.
Yeah, definitely a great answer. Bill Studebaker, we would love to have you back, CIO of ROBO Global. Thanks so much for joining us today. We would definitely love to get you on again soon.
Thanks very much.
All right. That was Bill Studebaker. I hope everyone learned a little bit from that segment because, we talk about that on the show sometimes, and he knew his stuff. So that was great.
All right.
I mean, this is where I'm always torn, and just, to summarize, is, I'm a value guy. I like value, but it's hard to invest in any of these companies on valuations because they're all extreme. But I look at this into possibilities, and automation and AR and AI, and I'm like, man, this is something I want to participate in. So it's an interesting way. He's got a nice design portfolio, like 1.5 billion in assets already. Crazy that it's grown that much already too. Nice ticker symbol. I mean, it's interesting to me, something like this. The only problem is, I'm a valuation guy, and if I'm sure valuation when I start analyzing, it's probably high too, just because the market loves this stuff.
All right, it's now 8:35. So Bill was great, but we got to go to our next guest now. That's Gary Kaltbaum. He's the owner and president of Kaltbaum Capital Management. Also runs the site GaryK.com. Always good for broad market commentary. So we'll be right back with Gary. And welcome back, everyone, to Benzinga's Pre-Market Prep. We're joined now by Gary Kaltbaum, owner and president of Kaltbaum Capital Management and GaryK.com is his site. Gary, how's it going today?
Doing great, sir. How are you?
Doing fantastic on this Friday, the 13th. So I guess we'll start you off. We haven't spoken to you in a while, Gary. Broad market. Give us your overall thoughts on where we're at right now.
My only complaint, which is not a complaint, is that the bullishness is over the top. We're hearing people using the words melt up. We're seeing articles calling for 35% move next year, which is what I don't want to see. But price-wise, we are in what I'd call territory that I'm not used to, and that is no corrections, no drops, no nothing, just persistent upside. And until that happens, you've got to be respectful of price or else. And I would say the short seller is probably going to be out of business very soon.
It's been very hard to short this market, Gary. Dennis Dick here. Just I wanted to go on, your melt up, and I've heard this too. One thing is that we haven't seen, and one theory that would poke a hole in that is that we haven't really seen like this day that everybody jumps in, we're up 500 Dow points, we're up. It's just a slow, steady climb. Like I think about it on the opposite way. They always talk about like meltdown and capitulation. And it's like when, a stock is trending down or an index is trending down, you all of a sudden get this washout day where everybody says, get me the hell out. I want out of here. And it can be the same on the upside too. You sometimes see it on little stocks where they go, they're up, 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 and then they go parabolic one day and that's the top. We haven't really seen like the parabolic day where everybody had to be in though. So right. What are your thoughts on that?
The interesting thing, one of the thoughts I was going to mention to you, I have not felt any what I call the panic buying. Yeah. And that's part of the process where things start to get in trouble. You're right. We have not seen the up 200 days finishing down 50 on the Dow or the up 80 NASDAQ days finishing down 10, which would signify that the upside's pooped out for now. So until that changes, you got to go with it. And I must tell you that this latest move started, I think, of 3 Mondays ago on that ugly down day, somewhat of a washout. And again, it's a daily drip, drip, drip to the upside. Again, I have yet to see anything that dictates any trouble. And you're also getting steel stocks have turned the corner. Oil is off the lows and looks like it's going to break above another range here. Other commodity names doing it. The housing stocks are in shape. If you look at the industrials, a bunch of them are in new high ground. So the talk of it's not being broad-based, it's more broad-based now, even though I'm still counting about 35% of the market and still not working. But there's enough going on, and we're seeing in the Chinese ADRs and some of the tech and internet just absolute persistence where pullbacks last a day and then they rally them right back up. And let me add one more thing. You're now seeing Amazon, you're seeing Google, some of these real big names showing up pre-earnings. Of course, that can change the playing field. But if they have a good reaction to earnings, there goes the NASDAQ 100 for more of the upside.
Gary, how do you approach this market? And I've been in the markets for 18 years, and I'm a trader, but I'm also an investor. And from an investing standpoint, I've always kind of taken the Warren Buffett approach, looking for value, looking for, growth at a reasonable price. It seems like the best performers here are the stocks that, like Amazon and Netflix that just keep going higher, Tesla, despite valuation. And the value stocks have been value traps here. How do you approach this market as a value investor? Do you have to change your mentality with it? Or is it you just wait for your timing?
I'm a big believer, since I scan everything in the market every day, is go with what's working. If value starts to do well, guess what? It'll show up on the screens. They will find an area, they'll find the low, it'll turn up, volume will be heavy. As they pull them back, volume will be light, and then the stair steps go up, and then you'll see things breaking out of range, and boom, there goes your value. And there's a few value things working right now, just not a lot, but this is somewhat of more of a growth environment. With the industrials now, Caterpillar strong as all heck after it gapped up a couple of months ago. So you're seeing enough out there that's working, and until it stops, and again, I'm seeing absolutely nothing as far as real distribution in this market, and it's kind of amazing, but also at the same time worrying, because when you see such utter complacency, you wonder when they do come after it, Is everybody going to be thinking, oh, it's nothing, and then all of a sudden it turns into something worse, and then the selling cascade? So that's what's to be watched out for. But on a day-to-day basis, it's still not happening yet. And every day I see the market down a little bit, looks like there's going to be some selling, boom, it just stops and turns right back up. And I hate sounding this way, but I'm being a reporter for you right now. I'm reporting to you the news. And again, the most important thing for me, until it changes, you better respect it. And I know some really darn good short sellers right now that are scratching their heads.
We're on the line with Gary Kaltbaum. Gary, the Fed. I mean, the Fed has come in here a few times and they talk about, cooling off the market, raising rates and whatnot. I mean, we can laugh that off, but even now at this point, they raise rates. Oh, that's good. The economy is getting stronger. It's good news here. What do you see in the Fed, the transition in the Fed, and the outlook for interest rates?
Well, look, the two biggest stories for me in the market happened in the last 2 weeks that were not reported. Number one, Europe and Japan basically all but said they're just going to keep printing money and keep rates negative, even though for the last 6 months they've been teasing, maybe we'll do this, they'll do that. But guess what? Draghi came out and said, well, if we tighten, that's going to strengthen the euro and that's going to hurt us. That started lifting markets. On top of that, we got one of the Fed heads out a couple of days ago saying, it's going to take minimum 4 years to roll back our printing of money. So all this is about as dovish can be. And if you think like me that the last 8 years that a huge percentage of this market is based on the complete and utter manipulation of interest rates with the printing of tens of trillions of dollars, I think that game is still on. And, Yellen can talk blue in the face about raising rates. We're at 1%, which would qualify as the easiest monetary policy in history, if not for the last 8 years. So, and on top of that, you're hearing Trump coming out right now and saying, I like low interest rates. That was his quote yesterday. What does that mean? Anybody he puts in as head of the Fed, whether it's still Yellen or somebody else, is going to stay trying with the low interest rates. And until the market bites back at this, it's just going to simply continue. And the worry is longer term always is that the yields on junk bonds are nothing. The yields on European junk bonds are nothing. And the reach for yield is gargantuan. And that means a lot of money that may not want to go into these areas like the market is. And at the end of the road, there's heck to pay. But with dealing with the here and now, and there's no heck to pay this second.
Gary, we're talking, kind of what's already happened. The markets have made these great moves. I know you have different clients, you advise to different people, but let's take young Spencer over here. And, he's working, he's saving some money, and he's just starting to invest in the market. I mean, what if he comes to me and says, I can't put money in this market after this kind of run? What kind of advice would you give to a younger investor, or let's say someone that just came into some new money?
Well, first off, young Spencer is right. After 8 years, very tough to want to just throw everything into the market and just think Jack Bogle and don't worry, everything's okay. Because if you're a big believer in the boom and bust cycle, the next bear market's going to be pretty icky. What I would suggest to you is do a little bit here and then do a little bit in 3 months and in 6 months. And if you're good enough to recognize great growth names that are really dominating their industry and know how to pick them as they come off of these bases, God bless you. But overall, for the average individual that's buying the funds and this and that, I would basically do it over time. I would certainly not throw it all in at this juncture.
Thank you, Gary. I appreciate that advice. Anything else that you're watching for? As we head into earnings season now for the third quarter, banks are just about done now. Any particular stories, sectors, or anything that you're watching specifically with regards to this earnings season?
Well, I'm a spectator at earnings season. I sit back and for me, it's not the news. It's how things react to the news. You had a bad reaction in Citigroup yesterday. You had a great reaction in BlackRock a couple of days ago. All I'm going to do is sit back and wait and see where the best reactions are, the companies that are guiding higher, the stocks that are gapping out of range because of it, that are doing something right. I noticed today Netflix, somebody said that their subscriber growth is going to be better than expected on Monday. So we'll see how that reacts. That's my game here, is just the kickback, and reactions will be everything. If we see a lot of Citigroups, not so good. If we see a bunch of BlackRocks, darn good. Again, my biggest worry near term, every sentiment indicator that I follow, which is pretty darn good, is off the charts bullish at this juncture. But that's good news in that it means the market's doing well, but bad news that if things get a little, hairy, there's going to be a lot of selling to come in. But so far, not a blip of selling. And I watch the markets very closely, and I'm just completely amazed how that is not happening at all, really anywhere. And I do attribute it to this continuous easy money policy. And by the way, central banks have printed $3 trillion this year, and admittedly have said they bought up assets with it. So I think the game's still on. Enjoy it, and hopefully it lasts another 5 years. That'd be fantastic.
We've been on the line with Gary Kaltbaum, owner and president of Kaltbaum Capital Management at GaryK.com. Thanks a lot, Gary. We'll talk to you again soon.
Always a pleasure. Thank you, sir.
All right. S&P busted out to a new all-time high here as predicted by...
Shocker.
Yeah, shocker, 25.55. Maybe today's the melt-up day, Dennis.
We're waiting for the melt-up day. I mean, we never talk about, everybody talks about a correction. I am waiting for the melt-up day, so it's a great point that Gary brought up. We haven't seen it yet. And I think you're going to see that day that we're up huge. Everybody says the shorts throw in the towel. The longs say, I have to be in. They all buy stocks. We're up 300-400 Dow points. It's a party in the streets. And then all of a sudden it turns. That's the melt-up day, and that's what you're waiting for to see and identify the turn. We haven't seen that yet, and that's why I think the party just continues here. So this slow, steady climb is the best thing for the bulls. Yeah, I mean, it's just slow, and then the worst thing for the bears. I mean, it's difficult to short this sleepy market. We just need a few more hurricanes and wildfires to get this market going. Yeah, it doesn't even do anything. I mean, we can have more hurricanes, and the market will go up on it. We need an upside capitulation. That's what we need to really end the rally. But I mean, if you're a long-term investor, you're loving it. So as a trader, I want to see more volatility, but we need that upside capitulation day, and it just hasn't happened. And we continue to pick up, more breadth from other stocks. I mean, we were talking yesterday on the show, McDonald's making new all-time highs here. Johnson & Johnson making new all-time highs. I mean, this stocks, it's they're picking up, some of the stocks that aren't traditional growth stocks are now growing here too. So, maybe we're getting close to that point, but we could have we don't know what inning we're in, of this bull market. We could only be in the third or the fourth inning here. Valuation is not crazy. That's the one thing. When we look back, in 1999 at valuations were nuts. I mean, the S&P multiple was like 50. Walmart traded with a PE of like 60. So, you look at a Walmart trading with a multiple of like 15. So it's a big difference than, where we were back then. So a lot of people want to call us a bubble. I don't think it doesn't feel like a bubble to me. There's definitely a bubble in some individual stocks. And, in some, those are going to be the ones that are going to come crashing down the worst when the market does eventually turn. But everybody's trying to call the top here. I don't see any signs of a top. All right. S&P's 54.75 up 5 1/4. Gold just got a nice boost here, over 1,300, trading up a few days in a row here. So glad about that in the gold market. I actually did a Nick Shaheen spread in the GLD, Dennis, instead of just doing the outright. So nice. Yeah, hopefully we can get that. That's how you do it. All right. So what else do we got? There is a ton of stocks to talk about. We haven't even got close because we've had so many guests. But great segments by the guests here. Hewlett-Packard guidance. Let's go to that. HPQ is trading up significantly here in the pre-market. Last night came out around 7:45. Gave an update. Spencer, details.
Yep, their 2018 non-GAAP diluted net EPS of $1.74 to $1.84. The estimate was $1.76. They are raising their quarterly dividend by just a smidgen, not really a whole lot, honestly. It was 13 and a quarter cents. Now it's 13.93, and that was it. Just the non-GAAP EPS and the dividend.
Stock lifting in the pre-market. One thing I did notice that went by on my timeline is that they talked about expansion into 3D printing. And if you look this morning and you're wondering why DDD is trading down, SSYS is down, it's because Hewlett-Packard was commenting. I think this is an area, and I think they're still going to be the player. I've said this on the show even a year or two ago. I think your biggest player in 3D printing is going to be Hewlett-Packard. So, and that's, maybe why the stock has continued to, really do well here. And your 3D printing stocks have not done well at all. I own 3D in my investment portfolio. I kind of wish I didn't. just because I think Hewlett Packard's coming for them. SSYS, though, is trading down pre-market. DDD is trading down pre-market. So those stocks could be under pressure here today with commentary from Hewlett Packard.
All right. Pre-market high, 21.05. So it'll be a target there. Could be some size. At 21, as it's never been in this area before. The former all-time high, that was just made 2 days ago at 20.72. So we'll see what happens at the whole number of 21.
Johan Smith in our chat has been patient here. He wanted us to talk about EFX. And I'll give you my thoughts here on EFX first. It got killed, obviously, in the hack, but it's been rallying. I mean, we're back to almost, 50%. And that's a number you could think about, Joel. We probably came back very close to that 50% retracement, kind of failed there. So that would be a case for the bears. The one case for the bulls here still, though, is this has had multiple headlines of bad news on the way up, and they've kind of shrugged it off every single time, and they've kept buying it. So I think they overshot when they got it down to 90. I mean, the market obviously spoke, when it got back to 110 fairly quickly here. It's just a matter of where do we go from here. So you had the big collapse. You kind of had a 50% retracement. Technicians would say, well, that's, looks like, a big level for it to get through, and it's struggling there, so it's coming back down. But I would argue also that every time this thing has a bad headline, even with the potential of the hack yesterday, when the thing got hit intraday, it really didn't get hit that hard. And then they obviously came out and said, look, it wasn't them, and the stock rallied. And that's why it's up here this morning, is because it wasn't, apparently their fault, or it wasn't, to do with them, this hack thing. But even when you're hearing about that, it's not getting hit like it was before.
Yeah, it wasn't technically a hack. It was that their consumer help page was serving up malware that was aimed at getting people to download fraudulent Adobe updates. So it was bad, but it wasn't like they were hacked again. It was just like a malware thing on the site, but it's still bad.
But the stock's up, so it is bounced back from, because they said that it wasn't their fault type of deal. That was last night, and I was watching as that news broke last night, and it rallied up into the 110 handle very quickly there when they kind of said it wasn't their fault. So that's the EFX story. Joel, your technical thoughts?
It's kind of tough here. It has been going down on the bad news. Kind of hard to figure the 50% retracement too, because do you take it from the all-time high? Because of that, you got a long way to go for a 50% retracement. But what I'm more interested is the test of this move off the 89.59 up to 114.46. Let's see if it back and fills in here and comes back in. Now, the 50% retracement of that comes into the 102 area. You see the low at 100. So, maybe I'd start to get an interest in it if it drifted back there, but still a lot of headlines on the stock. Couldn't get real excited on the upside until you clear that double top, and that's when the news, just after the news came out, a couple days after, you had a couple highs in 122 handles. So still too murky. I'd like to see it take back some of this move, maybe the 100 to 102 area for a validation of the rally.
Okay, jump over to AT&T. Last night on CNBC, Fast Money, great segment too, by the way. Craig Moffett from Nathan Moffinson or
Nathanson.
What's the name of the company?
It's Moffett.
I wrote it down.
It's Moffett Nathanson.
Moffett Nathanson. And Craig Moffett here said last night on CNBC that AT&T dividend might not be safe. And as he said, that the stock was trading around $36 after hours last night, so it was up a little bit after hours. It tanked all the way up to under $35.50 on those comments. They hit it hard. They probably hit it with 50,000 to 100,000 shares. People coming in, selling shoes on. It has bounced back here this morning. It's quiet here this morning. Still concerned, that commentary was out there. And AT&T yesterday absolutely annihilated. So it's funny how this ex-dividend stuff works, and obviously, maybe it was a headline that helped it out this time. But, we said, on that day, the day it goes ex-dividend, it typically runs up. It went ex-dividend on the 6th. And if you were shorting it that day, you could have got off at 39. And here you are 5 days later, be covering AT&T in the 35 handle. Stuff just works. It typically runs up ahead of the ex-dividend and runs down after the ex-dividend date. And man, that is one of the strategies that I've used for years. That's worked really well for me for years.
Pre-market low 35.42, the recent low, the move 35.10, but good old stock like AT&T, it's going to give you a double or triple bottom to lean on. And right now we don't have that. Just a tremendous move yesterday. You could see 4 or 5 or a couple weeks of gains, maybe a month of gains, basically wiped out in 5 trading sessions. So pre-market low 35.42 in AT&T.
Jump over here to the steel stocks, which are all flying this morning. U.S. steel trading up almost 5% in the pre-market. Actually, it's up 5.2% now. That's symbol X. NUE trading up 2.75%. Mitel over there in Europe, MT trading up 5.5% this morning. AK Steel up almost 5%. Steel Dynamics, your laggard. STLD, it's only up 2.5%, but wow. Steel hot this morning. Even Alcoa here, looking at it, it's trading up 2.5%. So metals flying here as well. Spencer, what's a headline here driving the steel?
It was that iron ore imports for China grew by over 100 million metric tons, and this is a headline from Bloomberg. So demand is high in China.
There you go. Yeah, that's what you're. Imported. Okay.
Yeah, China is importing.
Oh, okay. Yeah. All right, good. That makes
steel
sense.
Hot.
Yep. Let's just take a look at X here. That's been trying to break out 27.10, your pre-market high. I don't think that's the high of the move yet. Now, major resistance if we keep going here, just over 28. I see a trio of highs. Before you get there, though, 26.78. Where are we trading here in the pre-market? I'll just give you the pre-market high. We are over 27. Yeah. Let's see what happens at 27 here. Holds 27. Good to go north to hold that level. Holding 27 gives you a chance at 28.
Quick look at ratings. General Motors catching an upgrade at Barclays this morning, so defending it a bit after yesterday's little slaughter there. And then they're downgrading Ford, though, so a little pair trade there. Yeah, from Barclays. What are your thoughts here? What are your thoughts on General Motors? You look at it's had the big run up. It pulled back yesterday because it looked like, when they're idle in the one plant, the demand was low. Barclays comes right out there and defends it here. Yeah. And, the stock is right back up near those highs again here. Thoughts, GM?
Yeah, thoughts. Wish I would have bought it at 35 when we were talking about it. 45.59. That is your high of the move. Actually, you had three highs in that same area. So let's see what happens. If it creeps up there, if the sellers were there for 3 or 4 days, 45.50. Actually, you have four highs in the 20-cent range. Let's just call 45.59 the high of the move. Above that, another leg up. I mean, we talk about the magic numbers of 100 and 200. Maybe 50 is the number here in GM. And I kind of like that, or I don't like, but, Ford, bad news comes out on GM, and they ended up hitting Ford more than GM yesterday.
All right. As far as other ratings are concerned, not a lot to speak of this morning in terms of upgrades. GM, we mentioned GEL and ETR both upgraded. ETR upgraded at Citi, GEL upgraded at Barclays. As far as downgrades are concerned, we mentioned the Ford one at Barclays. Nothing really. Dollar Tree downgraded at Loop Capital from buy to hold. Hewlett Packard HPE downgraded at Citi from buy to neutral. And those are the big ones. CDW downgrade at Raymond James, and that's really it as far as other ratings. Dennis, was there other ratings that you saw today?
No, those are the big ones. Just to be a quick imbalance. Look, Square continues to rally. I mean, the stock's just been a monster. Full disclosure, still got it. SQ, 75,000 shares to buy here again. The stock made a new all-time high, 33.16. The rally continues. I'm looking for, this thing is now starting to get a little bit lofty. So, maybe eventually you're going to have some profit taking in this. But, it's went from 28 to 33, basically straight up. 1, 2, 3, 4, like 8 of the last 9 sessions.
No, 14 in a row yesterday. 14.
Is it up 14 days in a row?
Yeah. Yeah. Do you still have it?
Our imbalanced guy, he just wins. He's a winner, that imbalanced guy. He's buying every morning. He buys like 50,000 or 70,000 shares every morning. Man, he's up a lot of money.
Do you still
when he rings the register, we need to get the hell out.
Do you still have that in a swing trade or?
Yeah, in and out of it a bit. It seems like I you know what I like to do? I like to buy it at the close and sell it at the open because it goes up every day. So I've been doing that a lot. I've been buying it at near the close or even after hours and then selling it at the open. And it seems like, the bulk of the moves often right at the open there. I mean, it gaps up a lot of days. So that's not participating the whole way, but just kind of going with the flow in that way. And I've been buying the close and selling the open.
At a higher price.
Been working.
All right.
Are there other balances besides Square?
Baba, 67,000 to buy. Again, Alibaba's had the buy and balance all the time. GE, no imbalance here. Again, specialists must be sleeping. It's a 0 right now, which means the specialist is not to post it yet. But stock is trading up slightly here in the pre-market. Obviously, dividend concerns are still the main reason for GE being held down as well. Wells Fargo, 61,000 to sell. JP Morgan, 81,000 to sell. Wells Fargo under serious pressure here now. Stock trading 53.76. JP Morgan trading down about 80 cents. Procter Gamble, 61,000 to buy. That's going the opposite direction there. That's about it. Ford, 104,000 to sell. Verizon, 35,000 to sell. Kind of small.
All right, S&P's trading 54 and a quarter, up 475. Pre-market high 55 and a half. I'm not even going to give you any resistance because there isn't any. All right, so let's wrap up today's show of the week and see what we got on the docket for next week with Young Spencer.
Is that my new name now? Is Young Spencer? I thought you were talking about Dennis's kid. Whatever. Okay. As far as docket for next week's show, we're going to hear from Andrew Zatlin. He's Moneyball Economics. He's got always good, a little bit of a different view on the market from Andrew Zatlin. Faria Hamzeh would join us. Nick Shaheen, of course, will join us as he does every Tuesday. So some guests to look forward to next week, and I'll have them at the bottom of the premarket.benzinga.com web homepage later today for you to preview. But that is it for us today. If you want to catch any part of the show again, you can do that on our podcast, which is on iTunes, SoundCloud, and Stitcher, usually up about an hour or so after the show is over. Or go to youtube.com/BenzingaTV. You can just rewatch the show as it aired live right there on YouTube. So don't forget to like us on Facebook at PreMarket Prep, like us on Twitter at Benzinga, and everyone have a good rest of your day and have a good weekend. We'll be back with you folks on Monday.